Hey everyone, welcome back to Global Finance Watch. Today we're diving into one of your most requested topics, the real difference between investing and trading. I know there's a lot of confusion out there about these two approaches to the financial markets, so let's break it down together. Before we dive into trading, let's understand what investing really means. Imagine buying a piece of property. You're not concerned with its value changing day to day. You're in it for the long haul. This is exactly how investing in financial markets works. When you invest, you're buying pieces of companies, called stocks, or other assets like bonds, and holding them for years or even decades. When real investors look at opportunities, they're thinking about the fundamentals. They want to know how much money the company makes, how strong their growth potential is, who's running the company, and what advantages they have over their competitors. Take Warren Buffett's investment in Coca-Cola, for example. When he invested, he wasn't thinking about what the stock would do next week. He was thinking about Coca-Cola's brand power and its ability to generate profits for decades to come. Now, trading is a completely different story. While investors are like farmers, planting crops and waiting for harvest, traders are more like merchants buying and selling throughout the day. Traders are focused on price movements, both up and down. They're not necessarily concerned with what a company does or how profitable it is. Instead, they're watching price patterns, market momentum, and trading volume. A trader might buy Apple stock in the morning and sell it that afternoon. Not because anything changed with Apple as a company, but because they saw an opportunity in the price movement. And here's something most people don't realize about trading. You can actually make money when prices fall too, using something called short selling. Now let's talk about the different ways people trade, because this is where many beginners get confused. Position traders are in it for the longer haul, at least compared to other traders. They might hold on to their trades for several weeks or even months. They're looking at the bigger market moves, combining both technical and fundamental analysis to make their decisions. Then there's swing trading. These traders are trying to catch the natural rhythm of price movements, kind of like surfing waves in the market. They typically stay in trades for a few days to maybe a couple weeks. They're really focused on catching momentum shifts and changes in market direction. Day trading takes things up another notch. These traders are like sprinters. They start fresh every morning and close out all their positions by the end of the day. They never hold overnight. It requires intense focus during market hours, and they're watching every tick of the price. Then there's scalp trading, the fastest style of them all. Scalpers are making lightning-quick trades, sometimes holding positions for just minutes or even seconds. They're aiming to make lots of small profits throughout the day, which can add up quickly. Let's compare these approaches head to head. When the market dips, investors typically see it as a chance to buy more of their favorite companies at a discount. Traders, on the other hand, might see it as an opportunity to profit from the decline itself. Investors manage risk through diversification and time in the market, while traders use strict stop losses and precise position sizing. The time commitment is another huge difference. Investing can be relatively hands-off, requiring just periodic reviews and rebalancing. Trading demands constant market monitoring and quick decision-making. And when it comes to returns, investors typically aim for steady, long-term growth, while traders seek more frequent, smaller profits that can potentially add up to higher returns, though with increased risk. Your choice between investing and trading should really come down to your personal situation. Think about how much time you can dedicate to the markets. Consider your comfort level with risk. What are your financial goals? How much do you know about markets? And perhaps most importantly, what suits your personality better? Remember, both investing and trading can be viable approaches to participating in financial markets. The key is understanding which approach best matches your goals and lifestyle. Thanks for watching Global Finance Watch. If you found this helpful, make sure to like the video and subscribe to our channel. Drop a comment below with any questions or topics you'd like us to cover next. Until next time, this is Global Finance Watch, helping you make smarter financial decisions.